I know the CPAs are going to hate me for this, but they can't technically because they know I'm right. Because they constantly say no to their clients on like, hey, that's not my job. And I've been in the industry about 10 years now to understand what's happening to the CPA, and it's not fair to them either. It's not their fault. The industry was set up like that. Financial services are siloed industries. So a CPA's job is to actually look at you retroactively, see your activity, and then report to the IRS. Their job is not to tell you what exactly to do in advance to take care of taxes in the future. Where do I get off making these bold claims? It's because of my licensing. I have a Series 65, which helps me run my wealth management. I have a real estate license, which helps me do commercial and real estate deals on the floor. And I also have an insurance license, which I understand the insurance companies. And all of these licenses gave me the ability to give CPAs CPE credits based on the strategies that I was telling them. So that's how I ended up in the industry about 12 years ago, where I was looking for products for myself. And I understood, wait a minute, my CPA and my advisor are not talking, but I am actually bridging the gap in the middle myself, kind of making decisions in a vacuum. So it was an urge from the inside where I had to get licensed myself to understand the product. It's the chase of transparency. So then I started talking to CPAs and giving them continuing education credits and seminars and showing them tax strategies that included investment products, like market products, like your cash balance plans, like your life insurance, like your annuity products, even real estate, within retirement plans where you can actually defer your current income tax. So that blew my mind. And I was like, wait, business owners don't understand this. And it's unfortunate because they're not asking the right questions, or they're not aware that this can be done. And the retirement plan community kind of starts at a 401k and kind of ends at a cash balance. But there is a whole wide world past that situation for S corporations. And I think people are getting smarter and smarter with ChatGPT, and they can verify these types of claims that I'm making now, that a simple plan like a 412E or a cash balance plan, if you understand that thread, will offset a significant amount of your taxation. And that's just a deferral category. So there are other categories within the taxation world that can actually help your investments return better returns just by saving taxes. And that's the industry that I ended up in 12 years ago. And I've just been fine tuning it. I call it a Venn diagram of strategies, where it starts with investments. It includes taxes, and it also includes succession and philanthropy. And once we get into that sweet Venn diagram, it's very easy to kind of mix and match our investments to our taxes, to our goals. And that's kind of my job as a strategist.
Very interesting. And there's a lot of different paths that I can take right now. But I think the one I'm most curious on is, because you obviously meet with a lot of business owners every single day doing what you just said. What's the percentage of business owners that you meet that they come to you and their entire investment or tax strategy is based out of what their CPA told them?
Yeah, I would say 90% of my guys and gals are following the CPA advice right now. Some are. And the reason they're actually even coming to me is because they're frustrated from that advice and they're kind of done the level 1 strategy. So I divide tax strategies into 3 levels. And this helps my audience also understand, and the client to understand how to break down. The first level is that structuring LLC, S corporation, your retirement plans, your basic real estate investments, that is your level 1. And a lot of people have actually crossed $1 million, done the level 1, they've maxed that advice out. So the CPA said, go buy more real estate, it's going to help you. Okay, done. I have a couple of homes already that are investment properties. I have a 401k, I have a cash balance plan, and all the level 1 strategies are burned out. Now what? So this basic level 1 stuff is showing up and being helpful for even under 2 million of income. But it's becoming very evident that once your gross revenue is passing that 2 million consistently, and especially at around 10 million, it is a pain point. It's a sore point. So the frustration level is quite high right now. And I think most of these guys are actually problem solving with ChatGPT and doing really well with that level 1 advice.
Yeah, and correct me if I'm wrong, but what I think I've learned with like the 401k is the basic advice, like the number 1 probably strategy that you learn as a business or just a regular person that gets into the adult world and start paying taxes. Okay, put in your 401k and you're going to pay less taxes. But what I've learned is that as a business owner, oftentimes we think we're going to make more money in the future than what we're making now, right? So if that's the case, we're going to be in a higher tax bracket in 20, 30 years. And it's not tax-free, the 401k. Again, correct me if I'm wrong, but the 401k, you're going to pay taxes once you withdraw it in retirement. And if you're in a higher tax bracket, you're going to pay taxes on all the gains you made during those 20, 30 years. So like, it might not be the best strategy for everybody obviously has a unique situation, but it might not be the best strategy for those business owners. They might look into life insurance, for example, which is tax-free vehicles, or real estate, for example, as well, which are things that your CPA can't recommend because they're not licensed for, right? What do you think about that?
Yeah, you're nailing the head again. That's a great question. In fact, I've had many other podcasts that I've talked about how 401k is my last choice to invest. And it doesn't make sense because you're right. Business owners have so much more that they can do with that money rather than just lock it off into a 401k. If you're hemorrhaging money, you don't know what to do with it. You're just like, I don't have the capacity and I forgot to plan, like go for it, do that as a saving grace, as a Hail Mary. But there's so many better plans for you than a 401k. And I'm saying that as a financial advisor myself. I have a wealth management firm. I host 401ks. And yet I tell my entrepreneurs, like, are we sure we want to do this? Do you want to contribute to this? You like to set it and forget it. And you understand you're going to pay taxes in the future. And most business owners, you're right, they're not going to be making less than what they're making today. Because if you do it right, then you should not, right? Your assets should be more, your passive income should be more. And let me track back to like when they actually took away the pensions and actually put 401k in place. So the idea was the onus lies on the employee, not the employer anymore. And that's why the 401k came around. That's why it gets offered to you, because it's replacing that old pension program. So if you don't contribute to your 401k as an employee, the employer has no liability. They don't need to contribute either. And so the onus actually lies on you. If you are a W-2 employee, you're kind of stuck and you probably have to do a 401k because there are not as many options. But then you want to look at things like backdoor Roth. You want to take advantage of getting into the Roth side as much as possible as well. And some employers now offer Roth 401ks. And that's a lot better in your post-investment years, right? So when the money is coming back to you, you actually want to look at taxes in 3 different silos. One is that you get taxed today. Like if I buy real estate today, if I sell real estate today, I will pay my capital gains today. Right? So that's tax now category. Then there's the tax deferral, which is that 401k, SEP IRA, 529 type of category, which is like, I will get taxed later, the deferral, even the cash balance plan, any type of retirement plans fit in this category usually. And then the tax never category is what you talked about, the life insurance category, the Roth category, in which municipal bonds still kind of fit there. I mean, you shouldn't invest in it. There's not investment advice, but there are better other options. They're only providing a % return, not even keeping up with inflation. But that's the category where you also want experience and exposure, because people like Peter Thiel invested in things like Facebook from that and became multi-billionaires. And guess what? It's a very tax efficient vehicle. They're not going to be paying much tax at all. In fact, there's no income tax on Roth products, and life insurance is completely income tax free. So how you look at being taxed now and how you see tax in the future is very important for business owners, because the traditional advice does not apply to us. We are not looking to make less in the future. In fact, if you are looking to make less in the future so that you're taxed in the lesser category, we might want to talk about not retiring in the US, because it would be very expensive for you to retire in the US if you're planning to just live off your 401k and Social Security and thinking that you're going to make no income. Our inflation in California alone is 8%. So I don't know how you're going to plan for that. So don't plan to lose, plan to win, right?
Yeah. And I think as business owners, we're more kind of risk averse and more, I guess, confident in our abilities to make more in the future. So if that's the case, then we should also make our tax strategy and financial planning in that thinking as well. But just in terms of making what you said actionable, like what I'm taking away from it is basically just making sure we educate ourselves about what's out there. I think that's the biggest gap, is that we rely on one person, which most of the time it's our CPA, and we don't make the research ourselves that, hey, there's a ton of other things that you could do that perhaps your CPA is not licensed to tell you. That's why you're not knowing about it, but that you can implement. And if you're worried about fees, like the amount of tax you'll save, like it's not something you necessarily spend, right? Because it's just money you just transfer and you're able to redistribute that another place. So I think that's the essential of it,
Absolutely. In fact, what happens is that people get jarred by when I say, for advisory only, I will not do transactions. I will not tell you to move your CPA. For advisory only, I'll have a certain amount of fee for their environment. And I call it an investment, Because once you get educated in that strategy that works for you and you see it implemented and you see the effect of it, I have not just educated you, I've educated your generations ahead.
Yeah.
So you're talking about a real investment in education. So that's why I'm very, very passionate about that part when you said education. It's 100% correct. This is the time to ask the right questions, do your research. In fact, I just met a doctor another day and he was paying, I think, almost $500,000 in taxes and he's making like $1.5 million. And it's like, it hurts to see that. He's already done more than enough in level 1 strategies himself. And he's like, I don't know what other questions to ask because you ran out of questions. And that's why we talk about educating yourself in the strategies world so that you can then mix and match and plan for the future. So yeah, if you're going to pay $150,000 for that Harvard degree and then go hunting for a job in this economy because your area is not relevant anymore, because that's happening, then you could spend, 10, 20, 30,000 in fixing your tax returns and not paying 6, 7, 8 figures in taxation. I mean, it's a very small investment for a very large return. The ROI alone is here. You can see it in your taxes the first year.